So where do the markets go from here, especially as the Fed effect starts to wear off? If election year history is any guide, September may actually get off to a pretty good start. Check out the returns for the S&P 500 during election years dating back to 1928. And they look very similar here. If the trend continues, we could be setting up for a year-end rally.
Will we see history repeat itself? Joining us now is Jeff Saut of Raymond James, Bill Spiropoulos of Corestates Capital Advisors, Matthew McCormick of Bahl Gaynor Investment, and Lee Munson of Portfolio Asset Management. Lee, I read your comments about Bernanke's speech. I've never seen anybody say, you love the speech. He gave a little part of himself, it says here. What do you mean?
Listen, I'm probably like you. I don't really like what the guy is doing, but he came up right and said near the end, I used to be a young guy when I came to the Fed Board of Governors, and we had these theories that I used to come up with. Now I'm running the show, and these are non-traditional. I don't have any experience except for the last few doing this. So what I liked was the humanity where he says, you don't have to agree with what I'm doing, but this is the grand economic experiment, as my friend Rodney Sullivan from CFA Institute's always saying. And I think that what he opens the door for, he's clear he's going to do QE. And he's also clear this will have unintentional consequences that neither he nor us can understand.
I don't know. Given the volatility today, Bill Spiropoulos, what was more confusing, Ben Bernanke's speech or Clint Eastwood's?
That's up to the viewers. I'll tell you, both can leave a lot to the imagination. You know, quite frankly, this QE thing and everything else, it's time to get back to basics. And Uncle Sam's got to go home and leave us alone and let business take over. And I think the changing of the guard that cometh in a big way is going to be the most bullish thing that we've seen in probably 6 years.
You're talking about the coming presidential election? Or are you talking about the presumption that Bernanke's going to be perhaps gone, and that some were looking at this speech as a way to defend himself to whoever gets the next job?
Hey, listen, you know, it's a thankless position. He's done a great job. He kept us from going into the deep abyss of a depression. But now it's time to let the boys on Capitol Hill do their job, which they've been absent for 4 years. And I think that the head of the fish is what stinks. You get leadership, you start dealing with the issues at hand, and then maybe some of these ugly economic statistics will pass.
You never know what Bill is thinking.
No, he's pretty opaque about that. Matt McCormick, what about this market? We've had a pretty good summertime. Heading into the fall, when you usually get some choppy, rough waters, what are your expectations?
Bill, we expect more volatility, not less. If you look at what's coming up just next week, you're having the DNC convention. You're going to have the Fed meeting on the 13th. You're having the German High Court meeting. You're having so many market-moving events that we have not seen in recent that I think you're going to expect to see a pickup not only in the VIX but also volume. I think it's going to be very choppy going into the election. People still don't know what's going to happen. I think once the market does get an idea of who's going to win, you could see a move. But I think it's something here. I think it's time to expect again, choppiness, and I think high-quality dividend-paying stocks are the way to play it. Go for downside protection and income in an uncertain time.
Jeff, I can't help but thinking, but we're back to this kind of Tepper rally situation. Didn't we not get another signal of a Bernanke put? So if the market goes, if the economy goes south, Bernanke's there, and if the economy doesn't go south, then presumably the market goes higher. In other words, the market's higher either way. What do you think of that assessment, Jeff?
I think that his change in the word from could provide additional stimulus to will provide additional stimulus certainly shows that Bernanke is willing, if the economy continues to soften in here, to provide some kind of policy change. But all you had to get right this year is the chart from my friends at Bespoke, the typical election year pattern, the way it plays. The R squared, or correlation, has been about 98%. The historic pattern is you peak.
Yeah, but we're in I mean, I love those guys over there too, but you have to say we're in completely uncharted waters. I mean, the Fed governor said today, the head of the Fed said today, these are absolutely non-traditional. There's anything like it. And he also said, I will print money to jack up the Dow Jones. So I don't see how this is like, I don't see how we're in the gray area. The market has a put, period. There's nothing else to it.
Bill Spiropoulos, so you hinted, Bill, that you don't want him to do it. But what he will do and what you want him to do are two very different things. How do you invest based on what you think he's going to do?
Well, you got to get up in the morning and realize that we live in very dangerous times. And if you're a world-class advisor, you have to go looking for trouble. That's how you find opportunity. You're not going to be rewarded for cowardice on the sidelines earning nothing or in the 10-year at 160. pre-tax. You have to be kidding me. There's world-class opportunities out there. When everybody feels better, you're going to pay up.
Give us an example.
Real estate. There's going to be shortages of housing 3 years from now. Go out, buy real estate, buy opportunities in hotels. There's a number of things out there. There's distressed stuff that's for sale at pennies on the dollar. We just bought a hotel in Zamba Island at a huge discount on the beach, world class. There's lots of opportunity. You can buy whole companies, buy part of a company, but to do nothing is wrong.
All right.
Jeff Saut, what would you do here?
I think you're going to make a trading peak in the next 2 weeks and follow the election pattern where the correlation has been 98%. I think you get a pullback into the mid to late part of October, and then I think you rally after the election no matter who's elected.
Really? Even beyond this? Okay.
I don't know about that.
And what's going to take us there? What are you going to buy, Jeff?
I think you're going to get smarter policymakers and thus smarter policies. I think you're going to get more productivity out of government, and I think the surprise is.
But what are you going to buy?
I'm going to buy companies like Rainier Timberlands that I've been talking about on this show for like 3 months now. The stock's up big. We think it goes higher.
Okay. Why do you think we get better policymakers regardless of who wins? I mean, that is so optimistic.
Because I lived inside the Beltway. I have a really good network on the Hill in the Sam Rayburn building just south of that. And everybody I talk to knows we're on an unsustainable path.
Okay.
Wow.
But you're using logic. You're using logic with politicians, and that doesn't work. And I think you got to prepare for more volatility, not less. You can't expect logic to come out of this election. You don't know. Nobody knows. And so that case with the Fed happens if you do QE3, QE1, QE2 didn't work. Why QE3 is going to be great?
Well, why didn't QE1 and QE2 work?
Quixotic.
We're near the highs for the year. I mean, the stock market is actually, considering what we've seen in Europe, everything that's gone on.
It's had a pretty good year.
The stock market's had a good year.
That's right. That's right.
Well, that's okay,
Matt.
but it could get bad pretty quickly. You know, we were in the same situations prior to 08 when we're looking uncertain times, and we saw how politicians acted then. You can't count on politicians.
Bill?
What'd you say,
Bill?
Bill?
Well, you can count on the Fed every time you see that breaking. Every time you see inflation expectation go below 2 and be at 1.5, you're going to make money because the Fed will generally print. And I agree with Bill there. We don't, have clients that are buying, large-scale hotels, but our largest position, he will like to know, are real estate investment trusts. We like the ETF VNQ from Vanguard.
Right.
Our largest position is REITs because it's the only place that has continued healing.
Okay. I think we got the beginnings of a reality show here, guys. I don't know. There's 4 of them here. We could make this work. I don't know.
Bill, I think you're going to be on Mystery Science Theater.
Yeah. Thank you all for joining us, including you, Eeyore Spiropoulos, today.
Have a great weekend, guys.